Okay, let's give about 2, 3 more minutes, okay? Everyone get in here. Okay, 9 people. Let's wait. Let's give it to 8:40, 8:40, and then we'll start. Curry. All right, Bristol. All right, all right. All right. 2 more minutes. 2 more minutes. Get everyone on here. I want to master. Couldn't take that because I had it. Oh, okay. Man, Mundo. To be honest, this UJ pair kind of kicked me too because you want to know why? Because all right, so you see this, perfect, fake out over here. We don't trade, we don't counter trend trade, right, Mundo? So we knew this was invalid. So price kept rising 1, 2. However, I thought this was gonna be day one rise because they got out of here, right? I I had thought they changed the timings because they do that a lot. I thought they changed the timing as of in this was gonna be the trap move Thursday, Friday. So I thought this is what they did, and they just did a 3 intraday level, and then they held the level. I think someone had said that they were waiting on the head and shoulders on UJ. I think it was I forgot who, but they were waiting on the head and shoulders, and look what happened. The bottom fell out. And it's funny because the blueberry was there and the HOD was there, but we were. I also thought long, especially after this price burst that happened right here, this price burst, but then it started chopping around. So that's why I told some of y'all to exit because it didn't look good no more. But yeah, yeah, Mundo. 8:40. All right, all right. Let's get started, guys. I know it's a Friday, but thank you all for being here, for actually wanting to learn on a Friday night. I know some of y'all probably wanted to go party today or something, but this is gonna be a useful tool for your future. Like they say, work hard now, play hard later. Yeah, yeah. You know, but let's begin. And let me see. Yes, it's recorded. It's being recorded. Give me a second, guys. I had to do some adjustments today because I had a lot of questions on the on what the hell was going on with the GBP, Euro GBP not falling and stuff. So I have to do some explanation on that so y'all can understand what what happens when these things happen. Okay, just give me a second.
Shit, never dropped. Told him no. Tools. Aim to import that. Aim to. Never drop. I never want to drop. Tell me right there. Being such a low. Fuck. 1, 2, 3, 4, 5, 6, 7 days. Straight rise.
All right. All right, guys. So let's begin. Day 3. This will be the first. Well, this will be the last lesson for the basics for the market maker method. Next week, we will keep on going over the basics, and then once we as a team understand the basics of the market maker method, I'll share with you more advanced stuff, that include like swings and accumulation zones and things like that. I'll talk about those on once we get these basics. Okay, so let's begin.
Okay. Cool.
Let's begin. Okay, so one of my students sent me this. I believe today. I'm not gonna mention names. Um, he saw this M. He took a sell. He took a sell here. It was a little late, but it's fine. He booked profit right here. I believe somewhere around here. Really proud of him. He's starting to see the M's and W's. He on his live account, of course. He took it. Nicely done. Nicely done. You know who you are. Nicely done. He's doing the homework. He's starting to see things. He saw price rise on euro. He took an M, little late entry, but it's fine. He took it. No big deal. No big deal. And risk management was good on that one. 1 cent when you're learning. When you're learning, it's okay to risk 1% of your account. Pretty good. Pretty good. All right, next slide. Okay, so another of the students here, same group, sent me this. No names mentioned. You know who you are. So she sent me this. All right, as a group, can anyone else agree that this is correct? You can type in your answers on the chat box. Is there anything wrong with this picture so we can analyze as a team together? You can type in your answer in the chat box. Does this seem correct? Yes, yes. Okay, yes. Okay. Okay, so he said price didn't go anywhere near the stop hunt box on Monday after accumulation. So does this mean the cycle hasn't started? Yes, correct. You see this? You see all this? This is all chop. However, remember after the Asian range, what happens? A price either breaks up or down. So what did price do? It broke down. I believe this was Monday already. Monday going into Tuesday. So she identified this anchor point right here, which was good. And then what did we expect? 1, 2. Oh, hold on. Let me get some of this out. 1, 2, and you see how price rose only 2.5 days on this scenario. 2.5 days. 2.5 days. And she identified the V bottom, which is okay. This one, V, another V, M, correction was imminent back into the range. Back into the range again. You had the days wrong, but it's okay. You were only half a day wrong, so that's not bad. That was pretty good. Pretty good analyzation there. Let's see. Seems the third Mundo seems the third level should end at the first high. The next high is the second leg M. Are you talking about here? Mundo over here where I'm circling that? This is where the cycle ends, correct? Yes, okay, yes, you're correct. It ended there. That's where it ended right here. This M top, the bottom fell out for a little bit, back in the range, remember? Correction, back in the range. But yeah, other than that, good stuff, good stuff. Next slide. Okay, again, someone else sent me this, another the same group. The same group. Here, same thing. Accumulation, accumulation, hitting the stops up and down, up and down, up and down. He identified this anchor point, which was pretty good over here. He circled the W here, and she was confused on this area, but that's fine. See, she got right here 1, 2, and here was a little tricky. This area was tricky, however, but it was still level 3. When you start seeing the area starts going sideways like this after 2 days of rise, you see on this occasion 1, 2. This was 2.5. Remember, usually the moves are 2.5 or 3 days of rise or drop. This has started to chop around. You know you're on level 3, and look, level 3 correction. It corrected, price corrected, back in the range, back in the range. So good job on this one. Good job on this one too. Starting to identify the patterns. Good job. Good job. Okay, before we get to this slide, we're going to talk about fractional disparity, okay? Fractional disparity means, I don't have this on any of the slides, so if you want to just record this or write this down, feel free. Fractional disparity is pretty much, let me give you an example, okay? Just an example. Horrible drawing, by the way. Okay. Okay. We're gonna do the GBP pairs because these are the ones that were killing people this week. GBP USD, Euro, USD, and Euro GBP. Place close attention to this, okay? It's very important, actually. I didn't want to include this. I was going to include this in the advance, but I see some people were concerned, so I'm going to break it down for you. Okay. So example, GBP USD and Euro USD trade opposite of each other in the London session. The reason for that is because they need to work Euro GBP. So, however, on the charts, it looks like they follow each other, right? But lately, if you notice, look at this. Where's Euro USD? You see how Euro's going up? GBP has been dropping. And Euro is catching up. I'm going to tell you what I mean. So, example, GBP USD. 2, 3. GBP USD would be on the pending reversal. Euro USD would be behind GBP USD, and Euro GBP should barely be going to level 1. So example, so Euro USD is at level 2, right? GBP USD is at level 3. So they're going to hold GBP USD at level 3. And in the process of rising Euro USD, going into level 3 next, correct? Excuse me. one more level to level 3, the base cross, which is Euro GBP, will create the rise in Euro GBP, identifying that GBP USD is at level 3, identifying that Euro USD is only at level 2. The rise is expected on Euro GBP. So when this is an example, okay? So when you can use this in the future. So when GBP is on level 3, Euro USD is on level 2, and you identify them correctly, you expect Euro GBP to rise to level 1. Okay? So this is what I meant by fractional disparity. I just wanted to demonstrate it to you on next week or a couple of weeks from now. Once we understand the basics, I'll get on this more, okay? More into detail, but I just wanted you to get a little vision of how this fractional disparity works, all right? All right, so the lesson 3, first one, the straightaway trade, the 33 trade, the intraday swing trade, and levels, of course, levels, last but not least. So I'll give you some time to write these down. The straightaway trade is a trade that finishes everybody's account who is in margin trouble. That is the only reason it comes in. The 33 trade, the 3-3 trade, or whatever you want to call it, on day 3 of the 3rd level, you will have an intraday 3-level rise. That trade will lead to a reversal. So remember at anchor point 1, remember what we talked about? 2, on this level, day 3, you're going to see 3 intraday pushes. However, note this though. 3 levels won't be presented every day, but this is as a guide, okay? So you will not always see 3 levels on one day. Sometimes it's going to be 2, sometimes 3, but on this occasion, we're going to use 3, okay? 3. So once you see this, you probably either you're probably going to expect the multi-session M, a possible half of Batman like this, and drop, excuse me, let me get some of this out. Half of Batman like this, and then it'll slowly drop. So half of Batman, multi-session M, or they're going to do a 22 trade. A 22 trade, let me get some of this out for you, okay? Give me a second so I can show you. A 22 trade is when they come here and then they repeat the level. Watch this. They repeat the level and they come down here again and they do a second leg. So it's a second leg of a second leg. So you understand what I'm saying? So this leg, and then they do a multi-session M, and then they do a second leg on the second leg of this same leg. If you understand what I'm saying, that's a 22 trade. And keep this in mind. They do not take out this area. This is a 22 trade, okay? And then you expect this. You expect this. However, okay. However, I was going to show this also in that advanced class, but I'm going to just put it here now also. Remember, they will not come to this area and release these guys. What is my next projection? Going into Friday, pull back, false move, probably drop here, and then go back up there. Go back up here. They're not going to release these guys for their actions that they committed. They're in the business to destroy your account, keep your account, and make money. Got some questions. Like it seems like, yes, like an extra one. Yes, exactly. Briscoe isn't exactly. Okay, next. The intraday swing trade. When anchor point has been identified successfully, you can convert it into a swing trade lasting up to 2 to 3 days. I'll talk about this. All right. and levels. They are zones where the dealers accumulate and evaluate, usually causing stops getting triggered both ways before the next level starts. So pretty much you've seen this before. The same thing one, and then you see this little accumulation zone. They're hitting. So whenever you see price up and down, up and down, up and down is like this, it's because they're hitting the stops, the buy stops, the sell stops. They're all getting hit before they move to the next zone, which is probably here on an uptrend, and on a downtrend is gonna be here. Okay. Laugh out loud, Kurt. Laugh out loud. But anyways, okay, let's keep going. All right. False move week beginning. Euro USD. Show you the timing. This is on the July 22nd, so this is a recent chart. Same thing. Accumulation. What is Asian accumulation? This was level 3, I believe, and price dropped, 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 dropped. How did I know this was the anchor point? This was the end of the week, Sunday, going into Sunday, Monday over here. You see this, and you see your blue tracer again. Remember, always important. Your blue tracer is right here. What did I expect? Okay, so cash. Okay, but how did you know? How did you know it wasn't gonna do this and keep dropping? How? Okay, the reason I knew, because I knew price was already rising. Price was rising from here already. And also, this area held the whole time. This area held the whole time. On the Monday, false move week beginning, this looks like an anchor point to me, personally. Personally, this looks like an anchor point to me. Okay? So, what did I expect from here? I expected anchor point. I expected two to. Oh, oh man. Give me a second, guys. Okay. Anyways, I expected 2 to 3 days of rise, right? So what did they do? They came, went up, consolidate. Remember Asian range consolidate. Look at this. They came here and did an M. Blueberry pinned, dropped. How did I know this was still valid? They did not come here, right? They did not come to this area. They did not come here. Price went and chopped. Okay. Next slide. Let me see. Can you give us that pick of trades? Yes, Mundo. Actually, I do have a picture. I'm gonna demonstrate it on the next couple of slides. I do have a picture actually where I took a euro intraday swing, and I'll talk about it. Okay. All right. Cool. All right. Let's move on, guys and girls. Okay. And look at this. The same chart. Just going over it. All right. Came back one more time. They came back one more time. Remember this? Remember how they pinned the mayo, the excuse me, the blueberry, to show you, to prove to you this is the same chart. This trade still remained valid. Possibly emotions would have got involved because this would have been a long trade. But look at this. Look at this. The blue tracer is right here. And look what they did. News came and spiked this area, scared the longs, but how did I know this was still good? They ended in railroad tracks. That's one. Two, the blue tracer held. That's two. And look what they did next. They rose aggressively out of here. Aggressively. So I knew this was valid. This was valid the whole time, especially this. So this gave me confirmation that this would keep rising. Okay. Yes, yes, shorty. So if it doesn't go, okay, so you see how I said that, so you see how I said that when the market makers do not go back to the range again unless there's more money there, which usually doesn't happen. Example, again, the same thing, right? Same thing. M top, the bottom fell out. Keep on the normal day, which was possibly not this week at all because markets were very volatile. However, on a normal day, market makers will never go to this area again in the long run, at least for a week or two. At least for the week or two, okay? So what's the next move? Let's say this is Friday and they ended like this, right? False move week beginning, right? So this is a little too low. Let me go back. Okay, they're gonna do this and then they're gonna go back up here. Not releasing these guys. They're not gonna release these guys. So yes, shorty, they should not go into the range. They should not go back here. All right, all right. Okay, so yeah, it's the same thing expected. This could have been traded, but remember, this is level two, day two. This is day two, by the way. This is day two. Remember, we don't counter trend trade, but however, on this occasion, it would have been okay. But how? Okay, cash. But how do we know it'll be a good reversal and it won't go up here? How do we know that? Because the timing element on this played out. Look at this. Into the shadow box, and then they repeated the level again in New York. Multi-session M. Remember how I said that these multi-session M's and W's are very powerful? So with that being said, yes, this trade could have been taken for a good 10, 15 pips into the water. And you could have probably put a trading stop here, got some more pips here. You know, pretty good. But remember, multi-session M. If it's just a W, excuse me, an M in the shadow box just in London, I personally wouldn't take that trade. If okay, example, I think. Oh yeah, shorty. So your question, if they would have came here, and the box was here, they would have came here. Remember, this is the anchor point, right? This is the anchor point. Keep that in mind. This is day one rise. Day one going into day two, right? If they price would have came here instead of up here, let's just say they came here and they did a W with the trend, remember, with the trend, this is golden. Take it at the hammer or take it wherever you feel like this would have been perfect, okay? This would have been perfect for actually you could actually even swing this. Actually, this could have been a pretty much this whole thing, W, then V. This would have been a V bottom right here. This would have been pretty much a V in the market structure, which is WVVM, remember? So this would have been a good trade to take. But see here, they came over here, counter trend trading. However, they did a multi-session M, which is a very powerful reversal, good for 10 to 15 pips. Good, back into the range again. Going into day three. Going into day three. How? How do I know this? Remember what we talked about in lesson two? They crossed. Your moving averages crossed now. Mayo crossed the blueberry, going into level three, day three, right? Let's keep going. Let's see what they did next. Okay, this is the overall structure. This is the overall structure, all right? Doesn't this look like one of the first pictures I showed you in the first lessons? Doesn't this look just like it? 1, 2, going into 3, going into 3. Okay, moving averages crossed. You're going into level 3, day 3. All right. Reversal is imminent. And look what they did. Look what they did. They came here and they did a like a half a Batman type of reversal. Okay, all right, but okay, Cash, but hold on. So what? Okay, so what? So how would I know I'll be safe? How would I know I'm safe in this trade? How do you know that? Okay, the reason I know you are safe in this trade is because remember day 3 reversal is imminent, and look, the anchor point. Look, I'm gonna tell you right now about the anchor point. The anchor or peak formation high or low on dislocation high is where they start trapping volume, right? So you notice the pins start changing to the upside, pins to the upside, pins to the upside, pins to the upside, pins to the upside, right? You usually find the anchor point in level 3, right? And then look what they did. Look what they did. They came, reversal was imminent, 33 trade. They could have done an M over here, which is fine, but they didn't. They did a half of Batman reversal, and they went in here. Water crossed over here. Look at this. You could have taken this right there, actually. You could have taken this as soon as it crossed the water. A good trade. Look in the shadow box, pin the water, drop. Again, pin the water, drop. And remember, we don't counter trend trade. You see how it did like a fake W over here? Remember how I said that these reversals on the same shadow box are trash because they're not as strong. And look what they did. They dropped price one more time. They dropped price one more time. And remember, drop after an aggressive move, they must correct, and they corrected back into the Asian range, dropped a little more, pinned the blueberry again, back into the Asian range. Okay, so from here, 1, 2, what did I expect? So M, A, what did I expect here next? Anyone know? This was a chart from last week. So I expect, let's see. Yes, select correct. I expected that. Keep this in mind. This was on August 5th. This was, I believe, a Wednesday or Thursday, I think, last week. Let's continue. NFP, remember? I expected an A no matter what NFP did. Look at the overall structure, though. Look at the overall structure. This is the hour chart, by the way, so you can see the structure better. W, M. Remember, I expected another A. This was the other A. This gave me another A. This gave me another A. You see this fake W again? I actually have a picture where I took this trade, so I'll show you how it looked on the phone, okay? But I expected an A. And look what it did on NFP. Remember what I said on lesson 1? News complete the pattern regardless. And look what they did. They dropped. And what happens after an aggressive drop or rise? They must correct. TDI pointed out your exit would have been around here. Consolidate. TDI disconsolidated again. And what did they do on Monday? Does anyone remember? Yes, they did one more push down, and then they rose. This was level 3 chop somewhere around here, if I remember. Level 3 chop. The trade was over. Remember, they did not come here. Remember, Shorty, what I said? They did not come to this area. They're not in a business to release these guys. They're not in the business to release these guys. They came here, but did not come all the way down here. Okay? So this is the 33 trade. Got it. All right, Shorty. Cool, cool. The straightaway trade. Remember what I said? The straightaway trade usually gives you like fake M's and W's. Identifying these points in the charts are very crucial because when you get faked out like that, man, they make an aggressive move. I'll demonstrate you right now. So these are trades I took. These are trades I took. You can see this. This is GBP JPY. W. Remember, look at price. If you can see, price was dropping, right? Blueberry. Remember, very strong support also to back up my trade. So I didn't take it over here though. However, I took it here. I identified it a little too late because the GBP JPY is a little more aggressive. So you have to be more careful when trading these GBP pairs, especially. Okay, guys. For those who like to trade the GBP pairs, if you want to get if you don't want to get a lot of drawdown or whenever you're in doubt, just stick to the other pairs. Just stick to the other ones, okay? GBP pairs are more dangerous, but once you master any other pair, you can go on to the GBP pairs. I'm not saying you don't have to trade them, but you can, but just be cautious, okay? Because they usually are about double pips profit and obviously double pips loss. So yeah, anyways, I took the trade here. Look at this. If you can see this, this formed an M. On the phone, it looks like an M. Like, oh man, this looks like an M. It should be good. It should drop back to the mega water. No, you gotta be kidding me. You gotta be kidding me. Look what they did. When you identify the levels, which I'll talk about in a few minutes, identify the levels, you knew this was gonna go up. And look what they did. They did an aggressive move to the upside. From here on GBP 140 to 142, come on, that's 200 pips. Your stop would have been here if you would have took a reversal here, but man, you would have missed out. But us as a team, we know this would have been a straightaway trade because the levels, which I'll talk about. Fake M, remember we don't DNC, do not counter trade coming out of level 1, level 2, going into level 3 intraday, okay? Intraday. We don't do this. We do not take shorts or longs coming out of level 1 or level 2. Level 1 or level 2, okay? If they would have done this and did a fake M over here around this area on level 1, this is not good. This is not good. You go with the trend. You go with the trend, not against it, all right? So you would have done this. If they would have done it again, an M, and you identify the level correctly, or a V or a top like this,